Hi, this is Michelle Koppel, and I would like to share with you how to open an account to purchase cryptocurrencies in your retirement account. So, buying cryptocurrency in your retirement account is not that difficult. It's just I ran into a few little bumps and hurdles, and I thought I would share with you how I set mine up. So, it's easy to buy it in a self directed account. You must have a self directed account, and I will explain that to you. So there's two types of accounts, two main types of accounts. There are many types of retirement accounts, but there's two main types of accounts, and one is a Roth and one is a traditional. A traditional account gives you an immediate tax benefit. So if you had, for example, W-2 wages of $100,000 and you deferred $20,000 to as a contribution to your retirement account, you would be paying taxes on the $80,000. So that $20,000 that you contributed to a traditional account is not taxable for you in the year of the contribution. With a Roth account, there is no immediate benefit to contributing to a Roth account. So you don't get a tax advantage right away, but you get a tax advantage when you take a distribution. So with a Roth account, if you bought, say, a Bitcoin today, then you left it in your account and you were 59 and a half years old and you had the account for 5 years and that Bitcoin went up in value to $1 million, then you take that out and you convert it back to fiat currency and distribute it to yourself. That is a non-taxable event. So this is the advantage of having a Roth account. So there are limits on all of these accounts. They change every year and there are multiple types of accounts, but I'm going to talk mostly about the solo 401k account. So solo 401k is the account you would get if you were a single shareholder or husband and wife shareholder in an S corporation, for example. And there are limits. The limit that you can defer is 20,500 in 2022. If you are under age 50, if you're 50 or over, you can contribute $27,000 in 2022. For an IRA, Roth or traditional, it's $6,000 per person if you are a single person age under 50, or $7,000 if you're older than that. Now, the advantage of the solo 401k in an S corporation is that you can set the plan up such that the plan allows you to have the S corporation contribute 25% of your wages towards the plan as a company benefit. So that company benefit is a deduction to your S corporation. So there's another tax advantage. So again, you could contribute 20,000 yourself and then have 25,000 if you had 100,000 in wages contributed by your S corporation. Now there's a limit how much can be contributed per year. It's around $65,000 at this time. I'd have to look it up to tell you exactly, but it changes a little bit every year. That's a basic idea. Now, what you want is a self-directed plan. So now anybody could go down to your bank and open up where somebody else is going to invest in stocks or something else for you. And you have different types of accounts to choose from if you want somebody else to do the work for you. But if you want to do your own investing, then you want a self-directed account. So what I did was I went to my solo 401k. I am not affiliated with them in any way, but it was very easy online and they knew I had lots of videos explaining all the different retirement accounts. And so I went to them and they set me up an account. Now with that account, I am capable of, if I need to, borrowing 50% of what's in my retirement account, and that would be a non-taxable event. So you can borrow from your retirement account, and that's the way out of if you have a shortage of income. Now, I went and got this all set up, and then I went to my credit union and said, here's my account. Can you set me up? You have your own EIN that's for your account. It's a trust, so it would not be in the same name as yours. You are the trustee and the beneficiary, but the name of the trust is different. So let's say your name is John Doe and you set up Evergreen Trust. And so now your bank account needs to be set up as Evergreen Trust. And John Doe is the beneficiary and the trustee, meaning he can be the one that purchases the cryptocurrency once everything is set up. So I set up my account and took it to my credit union. And I had to explain to them, no, I don't want an investment account. This can either be set up as a business account or it can be set up as a trust account. either way, it will work. After a few meetings with them, they finally understood and they set me up with my bank account. But then I went and asked them to wire funds to a cryptocurrency exchange, and they said, well, we don't do that. And a lot of banks will not do that, even though it's a domestic bank, they won't do it. So I called every bank around, and apparently Chase and Bank of America do in some areas, but where I live, they don't do it. So I went back to my solo 401k, said, help, get me a bank. And they said Titan Bank does it. So I just sent all my documents to Titan Bank, and I opened an account in the name of my trust. Again, not your name. So if it was Evergreen Trust, you would have an Evergreen Trust account with them. Now you need 3 accounts, and those instructions would come with your setting up of your solo 401k. So you would have a Roth account, separate bank account, Evergreen Trust Roth account, Evergreen Trust traditional account, and Evergreen Trust uh, after tax contribution account. So you would have 3 checking accounts, and then you have to have. I went to Kraken. I couldn't get Coinbase to open a business account, and you open a business account. It's separate. So if your name's John Doe, the name of this account at your cryptocurrency exchange will be the same as your trust account. It must be exactly the same. So again, if we use something like Evergreen Trust, then the trust name up here when you log into Kraken, it's going to say Evergreen Trust. And so once you get these things all set up, then you can wire your funds from the bank to your Kraken account, and then you can start purchasing cryptocurrencies. Now you can buy, you can sell. None of those are a taxable event as long as you keep it in your retirement account. So you have a separate wallet for your retirement account. For each of these 3, you would have a separate wallet for the Roth, for the traditional, for the after tax contribution account. You would have a separate wallet for each one. You cannot commingle funds with your retirement plan and your personal funds. So that's why everything is set up in the name of the trust. So as long as you can buy and sell. Bitcoin goes up and you want to sell it, you sell it, and then you want to buy Polkadot, you buy Polkadot. None of that is a taxable event. No gains there are taxable. When it's taxable, if you have a traditional, is when those funds are withdrawn. Now those funds should not be withdrawn until you're 59 and a half years old and you've had the account for 5 years. Those are the rules. There are some exceptions to that, but otherwise there's a 10% penalty. So with the Roth, again, if it was in there for 5 years, and again, buying and selling, but let's say you just hold, as you buy 1 Bitcoin today and you hold it for 5 years, like I said, if it becomes worth $1 million and you're 59 and a half, you can sell that and then you distribute it to your personal account, always coming back with who's ever like handling your 401k trust, that you're doing everything properly. You distribute the money to yourself personally. If it's a Roth, it's non-taxable. If it's traditional, it is taxable. So this is a great avenue to go for anybody who does not want to pay taxes on their capital gains from sales of Bitcoin. And you're able to buy and sell as long as you do not commingle funds with your personal account. You are in control of your own retirement account, and it's fairly simple once that's all done. So I hope this has been helpful for you and that you can go and set up your own account as well. Thanks again. I'm Michelle Koppel. I'm an enrolled agent.